a company that has bought their stock back in billions of dollars over the last few years. They have elite profitability, among the highest in all of software, and a gross margin of 88%. They have fast growing profits. Their net income is up 55% year over year from 820 million to 1.27 billion, and that is a pretty large number. And to top it all off, they have a long track record of high revenue growth and extremely low customer acquisition cost. But when we look at the chart, they are down about 20% on the week on missed revenue of only less than 1%. And of course, this 20% drop is not the first time the stock has come down. We have been trending down for almost 9 to 10 months at this point. So as good as the fundamentals are, the stock is still down about 50% from the highs. So we don't just need to look at it from a fundamental lens. We need to look at it from a technical angle and understand what is happening. How is a company that is so well into their profitability, guiding pretty well, is down 20% on the day? So let's break that down. But before we do that, let's zoom out all the way and see where the stock was a few years ago, because that is fundamental to understanding why we're seeing such a big drawdown on a company that is growing so well. And as a company with 88% gross margins and such low customer acquisition cost, the stock was sitting at about $9.14 in 2023, and we have gone up, let's see, from the bottom, about 5,790%. That is a massive move. And when you see a movement like this on a stock, you need to understand that this particular ticker was priced for perfection. Even a 1% revenue beat can bring us down. But the funny thing is that even if we beat revenue by 1 or 2%, this stock was most likely still going to come down. The first obvious reason is that we made this entire 5,000 plus move in about 2 to 3 year time frame, and that needs to be digested. We need to see some proper pullbacks. We saw this blow off top, which gave us a retracement of about 60%, and then we continued higher and broke another all-time high. The next big reason I think this stock was going to come down is because of these double bottoms. And if you follow my channel, you watch my videos, I do love to take contrarian views on some of the technical jargon that everybody uses, because double bottoms, triple bottoms never really hold up. If you back test this pattern, you'll notice that most of the time, I would say good 80-90% of the time, I have never seen double or triple bottoms hold. And this was one of the indications that told me that we are going to come down and retrace this level. Now that we are in this zone, the 200 weekly moving average is also slowly trending back up. Let's see where the fib level sits on this stock. So let me draw a fib level from this previous low to highs. I really like the fact that 78.6% fib level is sitting at the previous swing low. When we bounced after the 66% retracement, we created a higher low, and that is perfectly aligning with the 78.6 level right now. And I'm going to tell you why this is so significant for me, the way I chart. And before we get into that, I also want you to observe something. We create this higher low, another higher low, another higher low, and then another, like a small higher low here, which created a double bottom type of formation. When you see a stock going upwards like this, just understand that down the road, somewhere later on in a year or two, we will come down to sweep one of these key levels. And in this particular scenario, I think the key level we would like to sweep under is the $320 area, which was this bounce that we saw before the euphoric top off. Will this happen right away? I don't think so. I think this will still take time. There is a chance that we just sweep these levels and then bounce up again. But if I was looking to take a position into app, I will wait for a sweep of 320 level, because this will give us a proper liquidity flush where weak hands will exit the building, new buyers will come in, and we are also getting a little bit more closer to the 200 weekly moving average. Now, I do want to mention that in a worst case scenario, we can still revisit the lows of 200, which is the first correction that we saw during the tariff tantrum of 2025. Now, if you think that this is unbelievable, this is unreal, just go back in time and remember that Amazon, Meta, these large caps retraced back to COVID lows, which was unbelievable at that time that it is even happening. So anything is really possible. So in my opinion, best case scenario is that we sweep the 320 level, we bounce around somewhere here and then reverse back up. And in a major drawdown scenario, we can sweep the $200 level and then start to reverse back up. Now, there is nothing fundamentally broken as far as I can tell in this company. And over the next 1 or 2 quarters, we can confirm that by making sure that revenue is not sliding lower, and most likely it won't. Their gross margins are pretty high. They're a software company. So unless we see a recession, I don't see a reason why app will fundamentally deteriorate. For now, I'm watching this stock. I'm not looking to take any position, but if you watch my previous videos, I have discussed the fact that we have a big opportunity coming up in September, October, November timeframe, where I do predict that S&P 500 will retrace 10 to 20%. And in that situation, the stocks that have already corrected might go even lower. And if the companies are fundamentally sound, you will see massive re-reversals once the correction on S&P 500 is over. And that is super important to understand, that you sit back, because right now you might be feeling a lot of FOMO that S&P 500 is breaking all-time highs, NASDAQ is approaching that level, but it is crucial that as a stock picker, somebody who is looking to profit from 1 or 2 or 3 stocks, they want to invest into the market to profit in short time basis, you sit very patiently and wait for the best time to strike. I'm not saying to sell all your ETFs, invest in the long run. Of course, do that. I'm fully invested in my ETFs and my long-term accounts. But when it comes to stock picking, you have to develop the patience and understand the macroeconomics, because we might even have a rate hike coming up. So we need to account for that. Macroeconomics is like a full-on blown puzzle that you need to be solving. And it's actually really fun when you start understanding where to move the pieces and when to sit back and not touch anything, and when to go all in and be fully risk on. Because if I am correct on this S&P correction that might be coming up, we are easily going to profit 50 to 150% within the next 3 to 6 months. So with that being said, I hope you found value in this video. Please leave a like, subscribe to the channel, and I'll catch you on the next one. Thank you so much for watching.